Hi, good afternoon, everyone. So we are going to start. Today we're just going to do very brief webinar on structured products in Europe, especially as in 4 weeks ago we finalized our 2024 numbers, and we wanted to showcase both the how 2025 was, but also some trends we've seen already happening and we think will impact 2025. Anyway, there will be a very big European focus on the presentation. But before we go to the European numbers, I wanted to share with you is a comparison. And I think here in the next webinars, we will add here APAC as we are going to launch our Asia Pacific databases this year. But we started with comparing EMEA with North America, and I think this is kind of shows a bit of the situation. EMEA as a region is still the biggest. Actually, not the biggest if you can compare with US and Canada. So North America took over EMEA in terms of sales of investment products. So we saw in 2024 $236 billion versus 208 in the previous year, which represents 14% growth. What I think it's impressive, it's of course the US growth, which just that single country getting close to 200 billion, and with a 44% growth. But also Canada, there with a 1/3 growth. But the Canadian market, if you split between, let's say, the deposits, the GICs, versus the notes, the structured notes grew more than 50%, 52% year on year. So you can see that Europe is, in terms of growth, is well behind US and Canadian growth. Now, in terms of countries, we wanted to show you. Let me just give you so you can see. Again, here we just give you a bit of a scale in terms of investment products, and this is by trading jurisdiction, so where the client is located. The French market is by far now the biggest structured products market, and we estimate that this sold close to $67 billion last year. There has been a slow growth compared with the previous year. Ian will explain more why when it comes to asset classes. Germany is the one that grew the most in terms of turnover on the investment products, the listed market, but also on the OTC, with some of the platforms selling a lot. Switzerland, and again, these numbers exclude AMCs, so you can see a decline on, let's say, the notes products. In Italy, small decline too, but still above $20 billion of sales. UK, it's interesting enough, there's been a decline, but I would say that there is the IFA market did grow last year, especially due to the big number of auto calls expiring and being reinvested, but that's only £3 billion. What we've seen is that although private banking is still the biggest, the majority, and it was very active, there was much less brokerage business happening in the UK. You can see Spain, which is flat, and then we go to other countries. What it's interesting is the Euro MTF. So this is more a coverage that we do on institutional, where the issuer does not declare where or doesn't know where the distributor is, and uses Euro MTF as a regulated jurisdiction. This is been growing, so there has been more and more, let's say, structured products being sold to institutionals. Now, in terms of outstanding, I think this is interesting. So we estimate there is $1.6 billion outstanding on structured notes, okay, between North America and EMEA with 1 trillion and 600 billion estimate in APAC. What's interesting is when we look at the growth of the last 12 months in terms of AUM. North America, although I mentioned 42%, and in Canada, the note space 52%. A lot of has to do with the rollover speed, which of course, equity markets perform extremely well. So you saw a lot of a pickup, but there is also a big demand for new investors or new money. So we can see 21% new money coming back to the market. Europe, the outstanding volume increased by close to 6%. And that's interesting because this 6% is close to the average return of the products. So, although if North America is attracting new investors or more money from the same investors, in Europe seems to be stable in terms of the notional invested. And APAC, which is declining, especially due to Japan and Korea. There's been some changes in regulation. Previous years were not as good, so we see a slow decline in APAC. Even the private banking space, there has been much less activity in APAC. Now I'm going to pass the word to Sofiane, who will going to show us some of the key trends.
Thank you, Thiago. So here we have market share comparison of structured product types in EMEA. What we notice is that capital protected products are losing traction to growth-oriented alternatives as interest rates decline. With rates falling, the opportunity cost of choosing a capital protected structure over a higher return alternative becomes less appealing. Also, while income products have also seen a drop in market share, they continue to be the most preferred, as you can see, with a market share of 43.65%. Globally, yield enhancement products such as reverse convertibles still lead, but face pressure as they became less rewarding compared to pure growth structures. Regarding product subtypes, the most important shift is that Barrier Phoenix products overtook Barrier Digital products as the most popular payoff type in 2024, capturing a 12.4% of total structured products volume compared to 11.3% for Barrier Digital products. This shift reflects a growing preference for income-generating structures towards the end of the year as investors seek enhanced yield in an uncertain market environment. Regarding asset classes, we had a lot of things going on in 2024. Approximately 45.7% of structured products were linked to single equity shares, marking a slight decline from 47.2% in 2023. However, in absolute terms, equity-linked products saw a 5.6% increase in volume, reflecting sustained demand despite a relative shift in market share. Meanwhile, indices gained significant traction, representing 30.3% of total structured products volume in 2024, from only 25.7% in 2023. This trend underscores a growing preference for broad market exposure as investors navigate more uncertainty. The DAX index stood out as key beneficiary of the shift towards indices, with structured products linked to this index more than doubling in volume, with 149% growth year over year, signaling strong investor appetite for German equities. And also, as Thiago said, with the higher volume in Germany, so it's normal that the local index gained traction, and it now represents 2.5% of total sales volume in EMEA. Regarding underlyings, fixed rates continue to dominate the scene with 8.2% of total volume. However, this leadership came despite a sharp year-over-year decline of 27.3%. Trailing fixed rates, the Euro Stoxx 50 remains undisputed with the 5.5% market share, followed by the Euribor 10-year swap at 3.5%. And within the single stocks realm, we have, unsurprisingly, structured products linked to NVIDIA experienced the most explosive growth, surging by almost 300% year over year, underscoring a strong investor appetite for AI. So that's pretty impressive. And here we did a comparison between QIS indices and broad market indices. Recently, we published a lot of research on QIS, whether in the US or in Europe. You can find all these articles on the SPI website. So here we focused on Europe. Broad market indices volume surged by 29% in Europe, reaching 65 billion euros. And quantitative investment strategies, QIS gained traction too, with structured products involving QIS surpassing the 20 billion euros threshold in Europe, driven mainly by the Frabelux region, which saw a 52% increase year over year, and which fueled this overall market expansion.
Okay, thank you, Sofian. So I'll continue the next section, and again, we'll be very happy to answer any questions you have at the end. So you'll have the Q&A or the chat, which you can put already your questions. Meanwhile, let's just continue. So I think, of course, it's very important, how the different issuers and funding worked throughout the year. And what you can see, and we didn't discuss, but Q1 and Q2 were very, very strong. A lot of auto calls expiring during that period. Q3 was, slightly more volatile, as well as Q4 with the US elections and a lot of uncertainty. Within the issuers themselves, I think it's a couple of things I want to highlight. First is that on the third-party distribution, we estimate that BNP Paribas took SocGen, and as BNP is leading the European League table with a big push in third-party distribution. Then the second point is US banks. JP Morgan and Citi gained ground, ranking 6th and 5th into our league tables. I mean, they were extremely strong, especially at the end of the year, especially with Citi. They were quite strong when it comes to funding, and that helped. Of course, Barclays is still on the league table in top 5, as they are the ones who have better funding. Now, in terms of auto calls, this is really it's where the decline rates, the funding costs. We expect banks to be very competitive throughout 2025. I think on Europe, besides the a bit of the US banks taking a bit of market share. We also have key players. Crédit Agricole has been strengthening their position throughout their distribution across Europe. So the top 3 across all Europe. And of course, it has to do with not only be very competitive on the rate space, on their structuring, but also, of course, because of their distribution network. Then Natixis is also made a comeback, especially in France through their internal distribution. Now let's talk about regulation. If we have in the US Trump trying to deregulate. I think it's important to highlight that he is even talking about get the US banks out of Basel III. And if he does that, and the European banks continue with Basel III, that will kill the European banks. They won't be able to compete with the US banks, which is even more surprising when you put the list of regulations and compliance trends in the EU and in the UK. So in the EU, we have two main things, all part of the retail investment strategy. We have the value for money rule, which the European Commission wants to have a rule to ensure investment products are fair values to the clients, and to enhance transparency. And also, we do still have an inducement debate. So commissions paid to advisors, that's still being discussed. Currently, I think they dimmed down what it was proposed, which was initially they want to do a ban, like you have in the UK, in Netherlands. But I think it's the ban is kind of now unlikely, and there is potential shift towards the best interest test and value assessments to protect investors. We see, and of course we have all the pressure from the US deregulating the trying to deregulate the industry, which will make the European banks very difficult to compete. I think the own Europe needs to needs to think how they're going to deal with the US. Also, a highlight to the UK, the FCA is now doing consultation to replace kits. Even some of the MiFID disclosure, MiFID 2 disclosure, is currently on consultation until the end of March. So we will see what the FCA replaces. I think the idea is that the kit won't be necessary any longer and will be mostly almost like a marketing document. We'll see. I know that the manufacturer of structured products don't really want to have another different regulation to fulfill. They would prefer to have the same across all European countries. But that doesn't seem to going to be the case. And then another trend is, of course, technology and innovation. AI and the using of AI. There seems to be four big topics using AI and chat box. So we have the personalization, execution and distribution, risk and compliance, tokenization, and digital assets. I think here we saw this. It's quite big trends. We've put there five different projects that are public. And I actually need to add Banca Generali in Italy, who's also just launched their AI to explain structured products to their advisors. But you can see there the different initiatives, the company, and the potential impact from resilience and compliance to asset allocation, diversification, and life cycle management, personalization, and automation. And I think that's the topics that we see in technology, and I think will be the focus for this year. Then, last and before we open to questions, we wanted to show you four big trends of four big trends that we see happening. The first is, France, although rates has been very strong, equity has been very strong, is, decrement indices in terms of market share. They lost a bit of market share, but they're still a big part of the market, especially for the international investment banks. What we believe is that we'll see a slowdown in single stock decrement indices. Currently, 50% of the volume on decrement indices in France is currently on single stocks. That number is from 2024. And we had a few problems, especially with Stellantis, very negative performance, the usage of points instead of a percentage, which mean now that, as the stock is below their knock-in barrier, the number of points, if you pass as a percentage, is now much higher. So there is some regulatory concerns. I think we will see a slowdown in single stock, potentially an increase on equity index decrement indices, as those still very competitive. Then I think I want to show you is strong Q1 and then a potential slowdown later on. We're just finalizing the January data, and we see that the market is up 2.4%, close to 80,000 investment products across Europe, just with the issue date in January. So massive from the 78,000 last year, but still continued growth. I think with lower rates and volatility cooling down later in the year, I think we'll probably will see a slowdown, but definitely a very it's going to be a very strong February, especially March, because you have a lot of protocols expiring. Then I think we will still see a sustained growth, especially because of total calls expiring and also issuer callables. We have a lot of issuer callables that have been sold throughout the last few years, and with the interest rates coming down, we see a lot of issuers that are going to call this and fuel reinvestment. Then, of course, I think there is still a demand for yield and diversification. So, as Sofian mentioned, income is still the biggest trend for structured products, and the clients love the most. And I think we will continue, especially if rates will continue to go down. Then last, and I think this is important, is alternative assets and RFQ. As you know, we will see lower rates, lower long-term volatility. I think we will see much more distributors, private banks, clients looking for opportunities, not only on other asset classes like credit, commodities, QIS, and so I think we will see a pickup on people looking for opportunities to offer new ideas and new products to clients, which of course, will need more automation, less of the big ticket sizes and smaller ticket sizes, especially between 1 to 3 million euros in product. And that's it. That's it for today. Hope you like it. So we'll be happy to answer questions. We'll just give you a few more minutes for people to send us questions. Okay, so not very many questions or very, very long questions. So we'll just wait a few more. Uh, yeah, probably 1 more minute. Um, the recording will be available for SPI subscribers. Now, the presentation itself will be happy to send to the people who participated on this. Yeah, on this meeting. Okay, great. Perfect. Thank you, everyone. And if you have any questions, feel free to reach out to us.